Vingroup functions as the national infrastructure of modern Vietnam, the operating system running beneath the surface of daily life. An urban citizen can experience an entire closed-loop life cycle within this single ecosystem. Born in a VinMac hospital, grow up in a VinHomes apartment, attend a VinSchool campus, and commute in a VinFast vehicle. The sheer scale of this presence makes it the largest private enterprise in the country. At its peak, the combined revenue of Vingroup and its subsidiaries accounted for roughly 1.1% of Vietnam's entire gross domestic product. By embedding itself into the basic necessities of healthcare, education, retail, and housing, Vingroup has transcended standard corporate boundaries to become a foundational pillar of the national economy. But physical permanence does not equal financial predictability. When you step off the streets of Hanoi and onto the trading floor, Vingroup, trading under the ticker symbol VIC, presents a completely different profile. You might expect an omnipresent real estate monopoly to trade like a sleepy, stable blue-chip stock. Instead, VIC is characterized by intense price fluctuations and a highly volatile momentum profile. The price-to-book ratio compares a firm's market value to its net assets. VIC trades at 9.15 times its book value. This massively disconnects from the real estate industry average of 3.59 and its own 5-year average of 2.39. VIC stock represents a high-risk financial wager, purchased at a massive premium over the value of its physical assets. To understand why investors pay that premium, we have to deconstruct how the empire actually makes its money. The origins of this modern Vietnamese infrastructure trace back to Ukraine in 1993. Founder Pham Nhot Phorn launched a company called Technocom, finding his initial success manufacturing and selling instant noodles. By the 2000s, he repatriated that capital back to Vietnam, pivoting from packaged food to property development and laying the foundation for what would become Vingroup. That pivot established Pillar 1 of the corporate anatomy, the cash engine. Operated primarily through the VinHomes and Vincom retail divisions, this sector develops the massive residential towers and commercial centers dotting the country. This is a visualization of Vingroup's internal financial structure. The real estate division acts as the heavy-duty engine at the center. It generates the massive, reliable cash flow required to keep every other experimental branch of the conglomerate running. Looking at historical data, operating profit from these traditional business activities has routinely accounted for the vast majority of the company's gains. In the third quarter of 2024, real estate and retail drove almost 82% of total operating profit. The real estate division serves as the foundational ATM, dispensing the capital for every other ambition the company pursues. Surrounding that core is Pillar 2, the social fabric. This includes the VinMac hospital network, the VinSchool K-12 system, and Vin University. Vingroup explicitly operates these healthcare and education arms as nonprofits or community value adders. They are not designed to be the primary cash cows of the balance sheet. Instead, they create ecosystem lock-in. By building top-tier schools and hospitals exclusively inside or adjacent to their own housing developments, Vingroup guarantees demand. This infrastructure directly increases the prestige, the property value, and the desirability of a VinHomes apartment. The social services operate as strategic loss leaders, designed to create captive consumers and drive up the margins of the real estate cash engine. The financial dynamic shifts with Pillar 3, the moonshot. This is VinFast, the group's massive expansion into global technology and electric automotive assembly. To pursue this, leadership executed a brutal pivot. They aggressively killed off functional, profitable domestic businesses, shutting down their VinSmart smartphone line and selling off their ubiquitous VinMart supermarkets just to free up resources. Building an EV brand from scratch and attempting to penetrate heavily saturated markets in North America and Europe requires an immense, continuous drain of capital. All that cash generated by the real estate engine is redirected into a single funnel to build factories and secure supply chains overseas. This forced the conglomerate to absorb massive short-term operating losses. To survive the extreme cash burn of the automotive sector, Vingroup's profit structure temporarily shifted away from traditional business and relied heavily on complex financial activities and asset transfers. By chasing the global EV market, Vingroup willingly transformed itself from a safe, monopolistic real estate giant into a highly leveraged, vulnerable tech startup. So, when you look at the anatomy of this entire ecosystem, who is the VIX stock actually for? Financial analysts generally agree that it is highly unsuitable for short-term technical traders. The stock's wide price fluctuations and lack of predictable momentum make it too erratic for quick entry and exit strategies, regardless of the physical empire backing it. Buying at a valuation over 9 times its book value requires a long-term conviction in the VinFast global strategy, coupled with a tolerance for extreme short-term risk. Investing in VIC is a multi-billion-dollar bet that a company born selling instant noodles in Ukraine can successfully build the cars of the future for the entire world.